To what extent has sustainable finance become essential in the corporate world? The article entitled Planet, Companies Are Accelerating Their Investment in Combating the Climate Crisis was published on the website businessinsider.com in March 2022. It was written by the authors Brian Overs and Megan DiMatteo. The tone of the article is, in my opinion, rather unbiased, with a slight tendency to show the positive outcomes of using green bonds toward environmental causes. This article deals with the issue of the climate crisis and the financial means used by companies to fight against this urgent environmental matter through green bonds. The authors give the example of Apple and its investments in green bonds. They showed the positive environmental impact of this financial instrument. Besides, the authors highlighted the green bond standards companies can follow and presented the two common sets of criteria, which are the European Commission's and the Green Bond Principles. To finish, according to the authors, maintaining transparency and compliance is a big priority as, let me quote the article lines 45 to 46, companies have to start demonstrating what they are doing inside these green bonds. So, nowadays, companies have no choice but to contribute to the fight against climate change. The planet is in danger, and it is high time firms took steps for a more sustainable world. Based on the article I have just summarized, as well as my own knowledge, I would like to show the importance of green finance in business today. First, I would like to define the key terms at stake. What is green finance? Green finance includes the financing in order to promote environmentally positive actions. In the first part of my presentation, I will highlight the key role of green finance in the business world, and in a second part, I will show the limits of sustainable finance. Part 1. It's a fact that green finance has become essential in the corporate world. There has been growing pressure on firms to become environmentally friendly. This pressure is highlighted by the authors, line 4, as pressure has grown for corporations to stop pollution. CSR, standing for Corporate Social Responsibility, has become at the heart of corporate strategies for years. Aiming at a sustainable development is not an option, it's a must for companies. Indeed, firms have become increasingly aware of the necessity to be green for their brand image, to appeal to green customers, to hire new talents that are more and more sensitive to environmental concerns. However, this green corporate strategy has a cost. This is why companies need to find ways to finance their sustainable growth. Green finance has become essential to help businesses raise funds needed for their green projects. Green finance will refer to all financial means and instruments toward environmental initiatives. For example, green bonds described in detail throughout the article. As mentioned in the article, line 7, green bonds are one way companies are using new financial offerings to drive change. Apart from green bonds, there are also green stocks one can trade on the stock exchange. Moreover, banks have also seen the amazing opportunity of helping the client through green loans. States also grant subsidies to support green investments. Therefore, with the rising need of companies for more funds for their sustainable development, the financial landscape has evolved with a broad range of financial offerings to meet the green corporate needs. These funds, whether raised through bonds, stocks, or loans, are essential for businesses today. They help finance green processes when companies decide to adapt their production processes to become more environmentally friendly in order to reduce their environmental impact. Green funds might help companies to reshore, for example. In addition, some factories may decide to renew their machinery and equipment to pollute less. Green funds might help companies to invest in green energies. For example, firms could invest in solar panels, wind farms, like Apple, as highlighted in the text, lines 17 to 19. Solar developments, etc., a wind farm near Chicago. Companies could provide their employees with electric cars and EV charging points, EV standing for electric vehicles. Firms could implement a full dematerialization, which would require significant investments in the cloud server, electronic signature providers, training for employees, etc. Encouraging employees to telecommute could also be part of the green strategy of firms, thus requiring more investments in equipment for telecommuters. For example, remote employees might be equipped with a scanner, printer, a desk, an office chair, a company's laptop and cell phone, plus some specific software to be able to work remotely. As a result, all these green measures, in order to pollute less and emit fewer carbon footprints, are significantly costly. Therefore, companies have no choice but to raise funds to gather the necessary funds to invest in their growth that has to be green. So in my first part, I have shown that companies do need significant funds to finance their sustainable development, thus demonstrating the importance of green finance to do so. I would like to highlight the limits of green finance. Green finance has its limits. First of all, it's quite difficult to really measure the positive environmental impact of green finance. Of course, there are going to be more transparency and reporting requirements, as the author mentioned, line 37. Companies benefiting from such funds are going to be increasingly accountable and will have to demonstrate what they're doing inside these green bonds, as highlighted in the final lines 45-46. Though one may be skeptical as to the actual impact of all these green funds on the planet. Every day in the news, we can hear about natural disasters happening due to climate change. Global warming is real, and despite all the growing green investments available, sadly, the planet doesn't seem to get better. We may wonder whether green finance is truly helpful. One cannot deny there has been a growing trend from investors to finance green projects and initiatives. We may wonder whether this is a temporary trend, a fad, or if this will last in the long term. Will investors continue to invest in green companies and green projects if they can't see a financial performance? In my opinion, as long as investors make money, they will continue to invest heavily in sustainable companies. But for how long? They may at some point prefer to switch to more profitable investments. It is hard to say if investors invest in green initiatives because they genuinely believe in green actions and thus are willing to support a sustainable growth, or if they just see a financial opportunity and will pull out when it will no longer make business sense. This would negatively impact companies in their green development for sure. The other limit I can see is that this race to get more and more funds to finance green projects might have prevented firms from focusing on other key strategic corporate goals, such as innovating and making profits. Companies have been so obsessed with becoming greener, they might have allocated all their available funds to invest in green projects only, rather than investing in innovation. Thus, this lack of innovation could at some point backfire and jeopardize future companies' growth and competitiveness. As far as I'm concerned, it is a major mistake and companies should address this risk. Indeed, it could lead firms to lose in the long run their competitiveness and decrease their market share. In the worst case scenario, they could lose their edge and even go bankrupt. Let's not forget what Milton Friedman said regarding the purpose of a firm, that the only responsibility of a firm is to generate profits for its shareholders. Companies must keep in mind they need to make profits to return an attractive ROI, return on investment, to their shareholders who took risks by investing in them. Nevertheless, by focusing only on being green, companies might lose sight of their primary purpose. Isn't it to satisfy their shareholders? This is a great dilemma, complex to solve for firms. Should they meet their shareholders' needs or their stakeholders' wants? That is the question. To conclude, green finance has become essential in the corporate world. The pressure to pollute less is undeniable. Firms alone cannot meet the growing expectations of harming the planet less. However, one may wonder whether this obsessive race for green money is actually working. Only time will tell whether pouring more funds into companies is the solution to combat climate change.